Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we are testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every time that the market tested its zone, it got rejected to the upside quite aggressively. And what we can notice is that at the moment the market is testing the exact same zone. So there is an increased probability of getting a potential rejection to the upside away from the area, as already happened in the past, every single time that the market was testing this exact same zone. So the monthly time frame at the moment seems quite bullish. Now, let's keep this in mind and drop down on the weekly time frame. From a weekly perspective, the situation is quite clear. We can notice how the market first created an impulse to the downside, then created a correction, then created another impulse to the downside, and currently we are in the corrective phase of this impulse. However, this impulse to the downside went and tested exactly that monthly support that we have just identified. Therefore, there is a possibility to see a deeper rejection away from that historical monthly support and demand, as we have already identified. The nearest structured levels would be essentially around here. This zone was already acting as previous support in multiple occasions, as we can see, all this zone here. So there is a possibility for the market to want to go and test what kind of liquidity there is inside of this area once more. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, this is where things start getting quite interesting. In fact, we can now start to notice a shift when it comes to the structure of the market. In fact, when it comes to identifying structure, the most important thing is looking at the creation of lower lows and lower highs, higher highs and higher lows, or the shifting from lower lows and lower highs to higher highs and higher lows. So essentially the shifting from a bearish trend to a bullish trend, which is exactly what is happening in this case. In fact, what we can notice is that the market clearly was creating lower lows and lower highs every time the market was printing a new low, and every time the market was printing essentially a lower high. Then the market shifted to creating higher lows but equal highs, and now we have seen a new higher high and now potentially a new higher low that at that point could signal a complete shift from lower lows and lower highs to then higher highs and higher lows. So from a bearish trend to a bullish trend. Now, the level that the market needs to break to the upside in order to confirm this shift is exactly this level here. Now, it needs to break it from a daily closing standpoint, because until the daily closes will remain below this zone, this area will continue to act as resistance, so the market could easily be rejected to the downside. However, if the market manages to break above this zone, that is where things get interesting, because if the market manages to break above this structure, at that point, this previous resistance becomes support. And after the break on the retest of the previous resistance turn support, that is where there is an increased probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential push higher away from this level. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's look at the data precisely for the euro. Now, what we can see here is that with the last reports, we still don't see institutional moving back to the bullish side for EURUSD. And that makes sense as the structure is currently still bearish. We're starting to see this shift. We're starting to see this creation of an inverted head and shoulders, which is simply from lower lows and lower highs to essentially higher lows and then potentially higher highs. And it makes sense that we still do not see a strong move into the bullish side because we have still not fully broken out to the upside. However, what we can start to see is that it's already 2 reports in a row that we see longs getting added. Now, we can see 11,000 longs added with the last report from an institutional perspective on EURUSD. And you might be asking yourself, okay, but why this is EURUSD if we're looking at the euro? Because all currencies on the spot are traded against the USD. So if we're looking at the euro, we're actually already looking at EURUSD. And even though we still don't see shorts getting closed from an institutional perspective, we are still in a downtrend. So it makes sense that institutions still have not fully shifted to a bullish side, even though they're already adding longs. But with the new report from this week, if we will start to see more longs added and shorts closed, that could definitely increase the probabilities of seeing more potential bullish continuation. So if we see this breakout and retest and institutions start longing and closing shorts around this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and your becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.